This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the AIPIS show for accredited income property investment specialists and those who aspire to be. If you're a real estate, mortgage, or financial professional, this is the place for you. We'll explore innovative investment analysis, sales, marketing, and income-generating strategies for the most historically proven wealth creator, income property. Learn from the experts as they show you how to build a better business and a better life.
It's my pleasure to welcome a returning guest back to the show. He was on many years ago, and that is an investor. His name is Greg Scott. He started his investment career with us back in 2008 and graduated into doing some big stuff in the apartment world. Greg, welcome back. How you doing?
I'm doing well. Thank you, Jason. It's good to talk with you again.
Yeah, it's good to have you. And it's funny, we just reconnected through a real estate forum. It was interesting. I didn't remember. And then you said, hey, I've been on your show before. I was a client many years ago. And then you told me what you were doing now. And you started with single family and, just kept buying and investing and investing. And now you're up to, you're a big multifamily investor, right?
Yeah, we just closed on a 272-unit apartment in Indianapolis.
Well, congratulations. And your first single-family home investment property was through our network in Indianapolis as well, back in 2008, right?
Yeah, there's a little bit of a story about that I can tell, but that was our first purposeful investment into the real estate.
Awesome. That's great. Good stuff. You started with single-family homes. You got up to, I think, like you said, 14 single families. Was that about right?
Yep, you got it.
Yeah, okay. And how many years did you accumulate the single families, and then what was the transition to apartments?
What ended up happening with us is my wife and I both work for automotive companies in Detroit, which is where we're from, and we were looking for passive income outside of the ups and downs of the automotive space. And through a bad flip, we actually turned into accidental landlords in Detroit, and that's when we realized that being a landlord wasn't that hard. Mm-hmm. And then we decided, well, we need to buy more property, but we didn't want to buy it in Detroit because it was subject to the ups and downs of automotive. And that's when we discovered your network. And in 2008, we bought our first property in Indianapolis. Mm-hmm. And after a year, we realized, wow, it wasn't as hard, as scary as we thought. And we subsequently went on to buy 6 more properties through your network and eventually through other places and get up to 14 single-family homes.
Yeah, that's awesome. Good to hear. When you lived, well, you still live, you lived in the Detroit metro area, and that property in Indianapolis, that was out of town for you, right? So, we have investors doing it from much farther than that, but after it's out of driving range, it might as well be as far as it needs to be, right? So that was a scary thing to buy that first property far away, huh?
Oh, well, the first one is scary, but then after that, our second one was down in Atlanta, which we actually never saw that property. We owned it for a number of years and then sold it at a pretty nice profit. And then Phoenix, and then we bought another one in St. Louis through you. And then the last one we bought in your network was also back in Indianapolis. Uh-huh. And interestingly, the very first property we bought, the one in Indianapolis, we still own it. And it actually has the very same tenant in it. We've had the same tenant since 2008.
Wow. Isn't that amazing? So have you increased the rents on that property in the last 11 years?
Yeah, we have, a little bit every year. That area hasn't appreciated hugely in rent, but it's done very well.
And so do you think you just kind of got lucky getting a tenant that stays for 11 years, or was it something you did, or anything you want to share? Because this is what people don't realize a lot of times. Some of these tenants stay for a long time. And, you probably heard it on the show. My mother still has that same tenant that we profiled on the podcast years ago that's been in one of her properties since, get this, 1989. Yeah. The guy could have bought the house, paid it off. Yeah, I mean, it's crazy. Yeah, but he's still renting.
Yeah, no, I don't think we've done anything really special. Just every now and then you get a property where a tenant stays a long time. We've had plenty of properties where we've had, tenant change out, it seems like every year, and sometimes get a tenant stays for 2 or 3 or 5.
Mm-hmm.
You just never really know. But it is kind of odd to have somebody in there for over 10 years.
Right. Yeah, that's something else. Share with the listeners, why you like real estate, if you would, and, kind of what your outlook is on it in the future and whatever you want to share like that.
You talk about it all the time, Jason, but the returns are really, really strong because there's so many ways you can make money in real estate. But it's also just incredibly tax favored. Just an anecdotal story, but I still work and was talking to my friends about their taxes this year. And almost all of the folks who just have a W-2 job ended up paying much higher taxes because they weren't getting as much taken out last year after the Trump tax changes. We ended up selling 2 single-family properties last year, and we had 1 apartment that we had invested in that sold. So we had a huge amount of capital gains, and we actually didn't have to pay anything other than our withholdings that we already had, even though we had about $200,000 in capital gains because of all of the deferred depreciation that we had in prior years. So that just gives you a sense for the power of and efficiency of the tax with real estate. So we just love it.
Yeah, that's fantastic. It's such a great asset. And what would you say to people? It kind of relates to what you're talking about the tax benefits. But see, a lot of people, Greg, they think they're just treading water, or they even think they're losing in the real estate game when they're really winning, because they don't really look at the multidimensional stuff, the tax benefits, et cetera. I always say a lot of people think they're losing, but they're really winning, but they just don't know how to keep score properly because they don't know how to analyze the numbers, right? What would you say to that?
I completely agree with you. People forget that their mortgage is slowly being paid down. If you pay attention to it, it's usually about, in a typical single family, maybe $1,000 a year that you're getting, but nobody really pays attention to that.
Mm-hmm, yeah.
You're generally getting some appreciation, and because of your leverage, if you look at the return on your total cash invested, it's usually pretty strong. And then you're getting the cash flow. And then you add on top of that the tax benefits, and it's pretty amazing the returns you can get from single-family real estate and multifamily real estate for that matter.
Yeah, right. Yeah, it really is. Any best practices you want to share on being a landlord? You said it was easier than you thought, and I love hearing that. Some people have a hard time, and some of that is just luck of the draw. Some of it is not paying attention properly, so it depends. It's for different reasons that it goes poorly and badly. Sometimes you get lucky and it's just good luck. Sometimes it's bad luck, But any best practices you can share with our listeners?
I would say the one thing that we've become pretty good at is very simple concept is trust but verify.
Mm-hmm. Yeah. Ronald Reagan, thank you. That's good. I love that.
It works. We trust our property managers, but we read the reports and we stay on top of them. If we hire somebody I've had some roofs go bad with hailstorms, and I've gone out and hired a roofer, and then make sure they take lots of pictures, and then have the property manager come by and just check that it's done all right, and check with the tenant that there's no leaks. And just doing that, constantly trying to just check up and make sure everything's working right has done very well by us. We haven't had to have any major changes in our life other than just keep doing that.
That's great. Trust but verify. Did you ever, well, you probably have by now, I'm guessing, but maybe in the beginning days, did you ever self-manage any of your properties, or did you always have managers?
We did not. None of the ones through your network. We have a 24-unit apartment. I'm only about 20 minutes from our house, and there were a few months we self-managed that. Not necessarily by choice. We ended up having to get rid of the property management company that was running it because they stopped collecting the rent 1 month, and managed it ourselves for about 3 months until we could find somebody else to come in and take it over. So we have experienced that. It was a good experience. Learned a lot of things just having done that. In apartments, of course, you're getting a little bit lower level of tenant than you do in the single family houses. So you get a lot of excuses and interesting stories and reasons why the rent isn't paid, but you work through it and you can make it work.
Right. Okay, so on that note, do you like in the single-family home world, I mean, it applies in the multifamily world too, of course, but do you prefer the class A, B, or C type properties? I mean, you talked about those interesting excuses you get from especially the lower-end tenants. Do you have a preference? Like each investor has sort of what they like better and worse, Some like Section 8, some hate it, It just depends, right? Temperaments vary.
I like working-class housing. Mm-hmm. And different people have different definitions of A, B, and C. So I always have trouble if you have a different definition, we may be talking about different things. But working class housing is something that people get. I like it because it's hard to make new working class housing. Usually they're older properties, which means you have a negative supply. They tear them down. They don't build new ones.
Right.
But the amount of people that need that is growing.
Mm-hmm.
And so when we, eventually we're going to hit a recession here, and the higher priced properties, in the apartment space, the places that get $2,000, $3,000 a month rent on a 2-bedroom, those are going to be the ones that get hit the hardest, because those people are going to want to downsize to maybe a $1,500 or $1,000 a month. But if you're playing in $800 or $900 a month space, there's always people that will rent that.
Mm-hmm. So if it's a single family home, $800 or $900 a month, or for multifamily?
I'm talking more multi on like a 2-bedroom. But if I was in the single family properties, we rent probably $1,000 to $1,300, $1,500, somewhere in that range.
Okay, so still bread and butter housing, but
yeah, very, very much so.
But that can definitely be B-class housing that'll rent for $1,300 a month, even lower end of the A range, depending on the market.
They're very solid neighborhoods. I mean, they're neighborhoods that they're certainly not war zones. They're certainly areas you'd feel comfortable walking down the street at night, but they're not $1 million houses.
Mm-hmm. All right. Any other best practices you want to share with people, or any technology that you've used, or anything that's helped you just kind of be a better investor, any side of the business?
I don't know if this is a best practice, but one thing I will say, because I talk to a lot of my friends who seem very interested in the returns we're getting, but they never get going. Mm-hmm. I think the most important thing is getting going, getting started, getting out there, doing something.
I love it that you said that. That is so darn true. The journey of 1,000 miles begins with a single step, as the saying goes, and you gotta just do something. There's so many people that, and maybe these are like your friends, right? They want to learn more about it. They agonize about it. They want to figure it all out in advance. And you just never can. You don't know what's going to happen once you do it. You've got to just figure it out while you do it, right? It's the iterative process. You learn on the job. It's on the job training as an investor, right?
Yep. I can't tell you how many times I've had friends tell me all the ways that it won't work, but it does. Yeah. And I could refute every single one of their arguments, but they always want to try to find more arguments why they shouldn't do it.
Yeah, absolutely. Well, the proof that it does work is, your success in building a little real estate empire for yourself and your wife. And you just retired your wife, didn't you?
Yeah, we did. Last Friday was her last day. We're very excited about that. She's going to dedicate her time full time to turning around this project that we just bought, and we're very excited about that.
That's fantastic. Yeah, good for you. Is the project you bought really like a rehab? Are you re-tenanting that property, or what are you doing with it?
Well, it is actually has high occupancy right now. We bought it at 92% occupancy. Looking forward to May, we're actually going to be up in the 98%. So we're in a good shape from that perspective. But that said, we're bringing about $3 million to rehab it and upgrade it. It's got a lot of deferred maintenance. So we've got roofs that need replacing, water heaters, HVAC systems. So there's a lot going on there. But then we're also going to start completely redoing the interiors. And as we redo the interiors, as the tenants just naturally turn over, we're expecting to, of course, bump up the prices to reflect the brand new interiors. And we will, I'm sure, over time, change the profile of the tenants a little bit. But we like the area. It's a solid area, just like the kinds that I mentioned before. And we just think there's a ton of opportunity here.
Yeah, that's awesome. What is your outlook on the renter market? Back in, when did you start listening to our podcast? Like, I know you bought your first property through our network back in 2008, so that was 11 years ago. But when did you start listening? Were you must have been before that, obviously, but how long before?
I started listening to your podcast when you were on, I think, episode 35, something like that.
Wow.
So it's a long time ago.
I don't know when that was exactly, but I'm going to guess that was about 2006 or 7, right?
It was around that time.
Yeah. And then 2008, I mean, you bought that first property right at the beginning of the Great Recession. How did that go?
Well, the first one has been, Indianapolis was, you talk about linear markets, that's about as linear as you can get. Indianapolis just really hasn't changed. But what was fascinating to me and really helped me understand the benefits of geographic diversification is around the same time we bought a property through your network in Atlanta and one in Phoenix. And Atlanta was a judicial foreclosure state, so the foreclosures took a lot longer to drag out. Phoenix was a non-judicial foreclosure, and they cleared them out really fast. And so the price of that Phoenix property quickly doubled. It was amazing. I just got lucky and bought it at the right time. And we ended up selling that property after a couple of years so we could buy more. And then the one in Atlanta, actually, its value went to about half of what we bought it at, but it didn't matter because it cash flowed great. So we just hung into that one for another 3 or 4 years, and then the prices came back up once all the
When did you buy the
processed.
Atlanta property? I'm surprised. That sounds pretty substantial. What year did you buy that one?
It would have been about late 2008, early 2009, somewhere in there.
Yeah. Everything in the news was like doom and gloom, the end of the world, Lehman Brothers failed, the whole global financial system, Iceland files for bankruptcy. Weren't you worried?
I think back in the days before I started investing in real estate, I would have been terrified because your 401k goes up and down. I know my 401k turned into the 201k.
The 201k, yeah.
Once we started investing in real estate, and the cash flow doesn't change on your property because Lehman Brothers goes out of business.
Right. And because the value goes down, it doesn't really change either, huh?
And that's why you want a cash flowing property, because you can hang on to it through the ups and downs.
Yeah.
And, in real estate, there's more ups than there are downs for sure. But just that one Atlanta property is an example. We didn't have to sell it because it cash flowed. The cash flow covered any repairs that we had that came up throughout the years. But we just held it 4 years longer than the Phoenix property. And when we sold it, we made a nice profit. So it was great. No problem.
Yeah, that's amazing. So you were talking about the Atlanta property. I kind of interrupted you there. Sorry. You were talking about the Atlanta property. And, even in a time with depressed values, it was fine, right?
Yes, the main reason the values were depressed is because there were more properties that were coming through the foreclosure process. So there was a flood of inventory on the market. So yeah, if I had to sell it, which I didn't, the property value was depressed. But my plan was just to keep it. It cash flowed. And so we just waited until that wave of foreclosures went through, and then it was fine.
Yeah, isn't that interesting? See, that's the thing. I think people that watch the values get themselves into trouble psychologically. What you need to watch is the cash flow. Yeah.
The operations and the cash flow. That'll get you there.
Yeah, very, very good, very good. How have you found your managers to be on the larger multifamily properties? It's obviously just my experience, but I was under the, I think, mistaken belief that when I started really getting into the bigger leagues and dealing with larger multifamily properties, as I've done, I've had 2 big complexes now. I've still got one of them, and I sold the other one, did a 1031. I thought the quality of the managers would be just a lot better. And I haven't really found that to be true, sadly. What do you think?
In the multifamily space, there's a real division between small and large properties, small being under 100 units, basically. And on the smaller properties, it is harder to find property management because usually you're having to have people share time between properties. And so you'll pay a lot for transportation, and we don't know where Bob, the maintenance guy, is. So he's got to be put on somebody's payroll, so it gets charged to the property.
Yeah. And, technology is going to get pretty good at solving that problem pretty soon. It's on the way. And you know what I'm talking about, like the apps that the contractors are starting to use that tracks their geolocation. It tags the photos with geolocation. You can't cheat this stuff. I don't want to say it's impossible, but it's pretty hard. Clocks them in and out based on location. Really, that's getting better, which is beautiful. Beautiful. Yeah.
With our large property management company on the bigger property, we've been quite pleased. Once you get over 100 units, you can usually afford both a leasing agent and a maintenance person. So on our property, we actually have 6 staff, and we hired a very professional property management firm. And we actually did a lot of due diligence on property management before we selected them. But they really have the processes and procedures ironed out. They've done a really nice job taking over the property and getting it stabilized, although we still follow trust and verify. So they tell us what they're going to do, and then we just verify that they're doing it and staying on top of things.
Yeah. What's your outlook for the future? I kind of alluded to that earlier, but I just wanted to get that as we wrap up. I think that would be a good thing to talk about. Oh, because what I was going to say is, back in 2008, when you started with us, I was talking shortly after that about the demographics coming at the rental market over the next decade being phenomenal. And I keep kind of pushing that back. I still think we got another really good decade of demographics in terms of high rental demand. What do you think?
Well, I keep waiting for this recession that's supposed to be coming. It hasn't happened, but eventually it's going to happen. But I still think if you're buying good workforce housing in ranges that people can afford, and you've got cash flow, you got nothing to worry about. Because you'll have a recession, then you come out and you have a period of growth. So as long as you're not putting yourself at risk by taking on speculative investments or negative cash flow investments, you should be fine through this little bit of a downturn. But if you're looking at kind of macro trends, we still have this echo boom generation, our Gen Xers that are a huge population. Many of them are delayed in buying into their first single-family houses. They're actually delayed in buying cars, a lot of them too, right, which we pay attention to. So I expect that'll be a huge renter pool for a long period of time. And like I said, there's not too many places out there that are building affordable, brand new housing, particularly in the apartment space, but even in single family. And most of the new stuff that's getting built, as you know, I've heard on your show, tends to be higher end stuff.
Yeah.
And so that means your supply is constrained in that area. So you got more people coming in and a constrained supply. It bodes well for those of us who are owners.
Yeah, it definitely does. It definitely does. Do you like my talks about packaged commodities investing? Because you're really a commodities investor. You know, you own all those raw materials, and it's a lot more expensive to buy them new and assemble that property again today, isn't it?
Yeah, absolutely. And that's certainly part of it. I know that from what I've read, I may get this figure wrong, but there was a study done that said that versus 20 or 30 years ago, about $20,000 of a new house goes to cover regulatory costs.
Wow.
And so there's another reason why it's hard to build entry-level housing, and a great reason to own it.
Yeah, all those barriers to entry they really bode well for the people that already own the properties. So congratulations, investors. I know most of you listening are taking advantage of what Greg and I have taken advantage of. And if you haven't, like Greg said, get started. Okay. Don't be the coulda, shoulda, woulda person. It's an amazing asset class, and it's really not that scary. It's been done for thousands of years, this concept, and, we're here to help you do it. And Greg, I just really appreciate you coming on the show again and sharing your story. It's always great to hear these case studies. Our listeners love them. So thank you again.
Well, Jason, thank you for having me on. It was good talking to you again. And again, I don't think we would have taken that first step if it wasn't for your network. So thank you for getting us into it and for all the education you have been providing throughout the years on your podcast, because that's what gave us the courage to take that first step.
Well, the pleasure is all mine. These are the stories I live for. I love to hear them. It's great that your wife is retired, and it's just awesome. So keep up the good work, Greg. Thanks again for sharing your story, and happy investing.
Thank you, Jason.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.